Perfect. And we are live. That's what I'm talking about, everybody. There you go. Let's go ahead and take a look at here on my channel, making sure everything is working as intended. Perfect. You do. You have to. Let's see. There you go. That's us. Come on. What's up, fam? There you go. Typical YouTube. My videos. Live. All right, there you go. Finally. Audio check. There you go. Perfect. We are in, guys, as you can tell, not in the office, but always ready. Mansoor, you're starting this one, beauty. That's nice. Perfect. Let me go ahead and get everything ready. How's it going, everybody? And welcome. Who is ready? Who is ready to see pumps, dumps, manipulation, and everything in between? Oh, I'm sorry. Look at this. Look at XCN, guys. Onyx. Glad I have some. Glad I have some. That's really nice. We're making some money. Thank you so much for the kind donation, buddy. Appreciate it and welcome. Okay. Oh, man. Every single chance we have, it's always a great opportunity to come and enjoy a great FOMC together. A lot of people are expecting a pause. A pause will be really nice, by the way. Really, really nice. Not much volatility. But, you know, always, we may have more surprises, guys. Bunch of surprises. So we'll keep you updated. Everything happening right now. And I'm waiting on the FOMC stream to kick in. It's gonna be starting in about 1 hour. So in about 25 minutes, guys, we should be able to see what the decision is, whether it's gonna be a cut, a rate hike, or a pause. So enjoy with me, guys. Drop a like, subscribe to the channel, turn on those notification bells. We're really happy. You gotta love it. Banana's on incoming, I hope, man. We're ready, man. John 360 in the house. What's up, buddy? Welcome. Welcome, welcome, welcome. So let me say hi to, who do we have here? Frank, John, Rodrigo in the house. Thank you so much for the kind donation, brother. Do appreciate that a lot. We are coming in. The people are coming in. Are you excited? Oh, man. So earlier today, I made a video for you guys. DeepSeek prediction. What do you guys think? For those who watch it, thank you. If you haven't, you're more than welcome to support us. DeepSeek is saying, I mean, up to 10 plus, why not? From 1 to 10, from 5 to 10, I'll take it. I'll take it, man. I mean, we've been waiting for such a high price prediction for XRP, for crypto. Believe me, we're not wasting our time. We're not wasting our time. We're just accumulating, despite the FUD, the haters, the Bitcoiners, and whoever else is attacking the community, or is attacking you, or is fighting you. Guys, the more people get frustrated with the messenger, the higher the likeliness that we are coming to the FUD, right? And when everybody's pricing and being very happy and being, you know, very excited that they're making money, that's kind of close to the FOMO, kind of close to the, oh, everybody knows that, right? Everybody knows how to make money, but in reality, I'm waiting for any other type of dumb blood on the streets. I'll take it, man. So always important, guys, not financial advice, to have some cash on the side. It works for me, and it works for a lot more people. We have a question in the chat right there, guys, too. The question is, what do you think is going to happen after the FOMC? Are we going to go down? Are we going to go up? Are we going to stay sideways? Well, I made a video yesterday, tomorrow. Very quick and easy, right? Simple video. The last FOMC that we had was December 17th to the 18th. And 24 hours after that, FOMC, we had a major dump. So get ready. Whatever happens, I have some cash in the side to be able to put it for sure. Who do we have here? Oscar, every day you're trying to explain your extra big price. Insanity, sir. We all want the pump. Brother, I'm very happy and blessed to tell you that nobody knows where the price is going, but if you open up long term, and I've said it many times, right? Banks, ETFs, case, completion, dismissal, adoption, regulatory clarity. We are early, so early that it's frustrating many people because we don't see XRP ballooning to the moon right now. But we have already waited, guys, 4 years. Can we just wait 4 more months? To me, it makes sense, but I do understand that we're welcoming new investors. We're welcoming new investors that may feel like it's too long. Well, my friend, it is not. There it is. We're live. Let me go ahead and mute this one. There it is. Alrighty, we're live. So you can see right there, everything good. Now, for those who join me here on the, let me go ahead and mute it. Yes. For those who join me here on the, what was it? The inauguration. Oh man, the inauguration. I got my stream taken down like twice. So this one, the FOMC, that's not gonna happen. They never do that. So I'm very excited for that. Very excited for that. So really good. Drop a like, guys. Subscribe to the channel. I'm taking a look at all your comments right here on my phone, and no matter where we're at, we'll be able to find some answers, right? FOMC press conference January the 29th. Yesterday I mentioned that we have core inflation at 3.2. Headline inflation is increasing over the last 4 months. Increasing. That's not good. That is not good, right? Now, I'll tell you something. Jerome Powell will get some backlash from Donald Trump if he does something that is not according to what Trump wants. And you know, I mean, by now you already know Trump. You already know how he likes to fight, right? If something happens today, that goes according to being bullish in the economy, then there's gonna be a lot of praise. But if we get something that nobody's expecting, oh boy, that is going to be some major blood and drama, major drama that you and I are gonna be witnessing very quickly. So I'm telling you what I already know. I'm ready for whatever, man. Like, if you remember what we had a few days ago, I'm showing you right here, fam, the 2.65 dip, right? 2.65 dip for XRP, and we had a Bitcoin dip of $97,000. It's all back up to over, 6 figures. I'm interested to see really what this incoming 24 hours will happen, because usually once they give us the rate, we don't see any major change unless it's something that nobody expected. Oh yeah, at that point, prepare for some major volatility. Major volatility. That's for sure. So I'm ready, man. Welcome to the 1,000 people joining us right now. How we all doing? Let's go. Have a great group of people here. You have some cash on the side just in case. Let's go. Sideways and a slow dump. Massive in the house. Thank you, buddy. Welcome. Dip was Monday. When was this going to announce or discuss? Yes, they announced at 2 p.m. Eastern, right? So it's going to happen soon. At 1 p.m. Eastern, or in about a few more minutes, they're going to give us exactly what the rate decision was. But that press conference, it always helps everyone to see where his mind is at. Jerome will be speaking in less than 1 hour. We always live stream these FOMCs. I love them, guys. It's a tradition here in the channel. We love to broadcast all the FOMCs and to take a look at what the price is doing. Like, for example, today, if you hold XCN, you are doing really well. Look at that beauty. Pepe, I bought Pepe, a little bit of Pepe. I've been buying some Pepe too. I'm happy to see bread up because it's just been getting destroyed. Ondo, dude, my Ondo position is so nice right now. And I've been telling you about Ondo a lot, guys. I've been telling you about Ondo. So why is it important? Well, because I know real world assets, RWA, is gonna be king, eventually in some time. BlackRock, and once we have some ETFs up, we are ahead of its time. We are ahead of the time of the whole adoption. That's, I think, one of the major problems for some to understand. Right now, there's many different things that are gonna happen, but we are already wanting to see it all flourish, right? Bitcoin at $1 million, XRP at $10, when in reality, you are gonna be able to have more chance to buy the dip. Oof. Sui. Oh yeah, Sui is another big one too. I got Sui. I gotta tell you that one. I don't know if you remember how for the longest time I wanted to buy Sui, but finally I was able to buy under 4. I bought a little bit above 4, but then most of them is gonna be under $4, because it was $5 Sui right before the Trump coin and right before Trump was president, if I'm not mistaken. Like, as we were waiting to the inauguration, we were seeing the major prices, and then once the inauguration happened, slow, everything came down. So we're kind of waiting for that recovery to come back up. You want blood on the streets. I get it, man. Many people want the blood on the streets for sure. Look at this one. So what now, Oscar? Another 72 hours and XRP will explode? Please stop. XRP will never explode. Ripple, because XRP is a cash grab for the CEOs. Look, we have some fudders in the chat. We welcome the fudders. Guess what? There's a lot of XRP fam here, and they will come and they will defend. As simple as not buying XRP and you can live a happy life. But guess what? It's easier to criticize. Well, continue doing so. I'm gonna enjoy my my XRP once it's $5, $7, and $10. While others will say, "Ooh, I should have bought," and I'm gonna tell you, yes, you should have, but you didn't. So it's about long-term, fam. We should all be fine. We should all be fine on what's to come. Fomc meetings, whatnot. Welcome, guys. Got a bunch of people here. Drop a like, subscribe to the channel, and turn on those notification bells. How we doing? How we doing? How we are doing so far? Let's see. I'm gonna go to X right now, see what people are thinking as we wait about 13 more minutes for a few more things. Welcome, welcome, welcome. Oscar, ignore the clowns. We know what's coming. Here's the deal, John. I obviously ignore, the haters. You don't have to worry about that. I've been in this business for a while now. I've been talking about XRP and many different things for a while now. It's not surprising, but as someone who, thankfully, I'm already like well positioned in my bags. Like even if XRP drops under 3 again, it doesn't really affect me, bro. Like I hope people could understand that even if Bitcoin drops to 80,000, there's major whales who bought Bitcoin at 10,000, under 10,000, 1,000. Do you see them panicking right now? No, they're not panicking right now. They're just accumulating. Look at Michael Saylor, right? It's all about good mindset. It's all about putting yourself like, okay, I'm gonna buy and don't touch this bag no matter what happens, because you have some vision that everything's just gonna get much better. Years away. We're gonna be really good. And we're just here, not financial advice, entertainment purposes only. Oscar Ramos, really happy to have you. So a lot of people who watch this channel will be multimillionaires, because I'll be a multimillionaire, guys, with some of you. So whether it's through XRP, whether it's through Bitcoin, meme coins, Kronos, Shiba Inu, the major pump is not here, but I'm always want to be ready once it comes, Always. Secret Terra in the house. What's up, buddy? Welcome. Always happy to see you. Ryan in the house. Let's go. Not cut its price in. It's just what comes out of his mouth determines the market. Julian, in a way, yes. We have to wait. 10 more minutes. 10 minutes to go. We got one donation. Glenn. Thank you, Glenn, for the kind donation. Appreciate it, Glenn. Welcome. Brand new donation. We love him. We love him. Thank you so much. Check this out. Texas Lieutenant Governor Dan Patrick unveils plan to establish a Texas Bitcoin reserve in 2025. Bullish. Dan Patrick. Obviously, I think, Bitcoin is going to have an amazing time here in the United States. It's a lot of Bitcoiners who want it. But the thing is that many Bitcoiners don't want anything else. They don't want anything else other than BTC. You see? Bitcoin only, that's what they want. But in reality, for me, it's like, nah, man. Bitcoin is not gonna make me very, very, very rich. I need more. I need more, for sure. It's always safe. What's up, Giovanni? It's always safe to say it's flat, but hoping for the good news. XRP is creating so many partnerships and use purpose aside from the community that standards behind it. It's sad and funny how Bitcoin holders and Ethereum holders are feel so threatened by XRP. I mean, I've covered so many coins in my time here on YouTube, and the one that has the most loyal fan base, I think it's gonna be XRP right now, because Bitcoin, a lot of people want one, but not many people can afford it. It's the reality. It's the major reality. Very good, fam. So less than 10 minutes to go for the decision on what's going to happen for XRP, so for FOMC. So what I'm going to do is hashtag FOMC, just like this. So check this out. Today, the Fed interest rate decision, previous 4.5, consensus 4.5, forecast 4.5. A lot of people are forecasting a pause. A pause. FOMC in 20 minutes. Get ready. People are forecasting a pause right now. We'll see if that's gonna drive a major pump or a dump. We'll see, man. Excited. You got to pump it up, and then pump it up. Texas came out with a Bitcoin reserve, some news, legislation coming in. Excited and happy to see that flourish. Welcome to the new people coming in. Guys, drop a like, subscribe, and also click the first link down below and join me on BTCC for up to 10,000 welcome bonus, cheaper fees on your trading, buying and selling and doing all you want, and bonuses. If you're looking for a place to do it, Canada, the US, you're good to go. First link down below, all for you. I'm doing it there. I'm also doing weeks, up to 20,000 welcome bonus. Why? Well, because I want to make money, you know. That's what we're here for. Putting some ideas on your plate and letting you do your own research so you find the best ways to increase your wealth and try to make as much money as you possibly can. That is my goal. That is my awesome goal here. Let me take a look at your comments too. I'm seeing. Please answer. Will XRP hit 10,000 before 2030? That's like a question that it's for anybody to jump in. 10,000 per XRP. Obviously, you have watched all those crazy price predictions that I have talked about in the channel, reacting to those. Not saying that that's what I'm subscribed to, right? I think because we are not even there yet as far as adoption wise, and the XRPL and the banks here in the United States and the partnerships, not many people know exactly how things are going to unfold. But I'll tell you, if you look at the last couple of months, we went from 50 cents to $3, close to $4, right? That's amazing. So I know that a $500 billion market cap for XRP is attainable. That's attainable, guys. A $500 billion market cap for XRP is a $10 price. All right? It's a lot of money. It's a lot of money. You got to pump it up, and don't you know, pump it up. So FOMC right now, you're on Powell pause. That's what I'm seeing, which is good, 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 good. Good, 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 good. I'm hoping the XRP price drops. I want to buy the dip. Let's go. 4 more minutes. 15-minute chart. Let's go. Ooh. 3 white soldiers. 3 white soldiers. Ooh, that's bullish. Thank you. You guys are, I'm paying attention to your comments right here. Paying attention to your comments right now. Come on, baby. Give us some goodness. Give us some goodness right here. Oh, yes. I got your comments right now. We have 1,000+ votes. I'm going to change this to major news. There you go. You got to pump it up, and don't you know, pump it up. Welcome to almost 2,000 people watching us right now. Oscar Ramos here. I'm not in my studio, but we still grind for you. Always. Always. People say that the same thing about Bitcoin when they said $100 was impossible. Ross. The sky's the limit, right? Never say never in crypto. That's for sure. You called 3 black crows. That was yesterday or the day before? When you're trading, I mean, you have to look at the candles, the Japanese candles every single time, right? But that one looks really nice for a 3 white soldiers. This guy doesn't sleep, but this is his doing. That is how hard I work. That's me, bro. That's me in a nutshell, guys. We don't stop. We cannot stop. That's how bad we want to be successful in crypto. That's how bad we want to be successful, guys. That's basically what it is. Okay. 2 minutes, 2 minutes, 2 minutes, 2 minutes, and we are in. Welcome, everybody. Happy to see 2,000 people plus joining us right now. Always appreciate your selection and preference. We'll be watching in 30 more minutes. Jerome Powell speak to all of us, and the markets are going to react. Whether if it's a pause, a hike, a cut, 90% plus people are waiting for a pause. You will see here live with me a major dump or so if we get something that is not expected. So here we go. Here we go. Perfect. Seconds away to see the decision. Let's go to the 5 minutes. See a little bit more. So far, buy. The green is winning for the price of XRP. Rates unchanged, maybe. Federal funds rates remain unchanged. Let's see, expecting no cut. Breaking, the Fed has announced no rate cut as expected. Breaking news, everybody. The Fed keeps interest rate unchanged. No change. No change. And we are starting to see some of the reaction in the price of Bitcoin and XRP right now. No change right now. Justin, FOMC keeps rates 4.5 as expected. All eyes on Powell right now. Market wants to hear the sweet rate cut word. All right, everybody. All right. Breaking news to all of you. Just want to confirm again. Okay, here's the statement, as you can see right here. Statement. Let's open it. Pauses. Breaking Federal Funds Reserve pause interest rates. I'm gonna be posting this one too here, guys, so everybody knows. So for those my new people coming in, you guys will know what happened. There you have it. Breaking news, everybody, and we're waiting now for the press conference. So here it is. Let's see. Federal Reserve issues FOMC statement. I want to make sure that you can read very well, guys, here. There you go. That should be much better. Let me just take a look at the price of BTC right now. Price of BTC right now in the 5-minute chart. Not major change, not major sell-off, not major volatility as of right now. Minutes after. So recent indicators suggest that the economic activity has continued to expand at a solid pace. The unemployment rate has stabilized at a low in recent months, and the labor market conditions remain solid. Inflation remains somewhat elevated. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the long run. The committee judges that the risk to achieve its employment and inflation goals are roughly in balance. The economic outlook is uncertain, and the committee is attentive to risk to both sides of its dual mandate. In support of its goals, the committee decided to maintain the target range for the federal funds rate at a 4.25% to 4.5%. In considering the extent and timing of the addition adjustment at the target range for the federal funds rate. The committee will carefully assess incoming data, the evolving outlook, and the balance of risk. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. It's like I'm reading the same thing over and over and over. Like I've been watching like 10 FOMC so far, and it's like the same jargon over and over and over, but it's okay. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implication of incoming information for the economic outlook. The committee will be prepared to adjust its stance of the monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessment will take into account a wide range of information, including inflation expectations and in financial and international developments. And there it is. So everybody, we just read the FOMC statement. No change on the FOMC, and look at that beautiful red candle. Oh baby, bring it. Ooh, what do we have right here? Oh my goodness, I'm seeing all my alerts right now. They wanted to liquidate some people right now. Okay, we're seeing a breaking change in the price right now. You're seeing it right now on the screen, everybody. Let us know in the comments how you feel. Again, under $3 XRP. Who is buying? Who is doing it? Less than 30 minutes to go for the decision statement and for the press conference. Right now, we're going to be hearing on right here the breaking. Federal Reserve has decided not to cut or hike interest rates. I think what everybody was expecting, right? So not really a reason to panic per se. Rates unchanged, rates unchanged. Let me go to Watch Your Guru. I'm gonna repost this one. 4.25 and 4.50. As expected, right? Up or down? Good. Very, 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 very good, everybody. So we got another 2.97 on the price of XRP. What about the price of BTC? We got a 101 for BTC and a decent 2.99 for XRP. Back to 3. It's what, 2% drop or what? Yeah, 2-3% drop. 2-3% drop in the 5-minute candle right now for the price of XRP. And for other ones, let me go ahead and go to some that are dropping the most. Onyx, XCN, they're at H bar. In the trading view right here, you can see how in the 5 minutes. Oh, it's not gonna let me. Okay. Classic. But some other cryptos came down a little bit, just a little bit, not much. There it is. Okay. Well, we got the answer that everybody was expecting, right? No change in the interest rates. Welcome, everybody. Happy to have you here. Drop a like. Consider subscribing to the channel. Turn on the notification bell button. It is tradition here on this channel that we always stream the FOMC. We always go over what happened. We react to the press conference. We summarize things, and we go and move on to our days. Now, last FOMC, we got a major dump 24 hours later. Let's see what this one brings. Charles, team isn't great. Bson, BC, what is, oh, Tima. Appreciate it, buddy. Thank you so much for the kind donation, and shout out to you as you continue building in your project. Let's go. Now, is this a good or bad thing? Neutral. Let's put it this way. Um, it leans more to a bad thing because he didn't cut it. He mentioned in the previous FOMC, guys, that he was gonna do a 2 cuts in the entire year of 2025. So he is obviously waiting. I mean, imagine if you said that we're gonna do 2 cuts, would you just waste or use one at the beginning of the year, or kind of wait it out to see how things are gonna play out for the year? So I think that's what's happening. The goal is to, as the statement explained, right? The goal is to see how employment, inflation, many different variables play out. But as of right now, this is just crushing some leverage positions, liquidations, right? A lot of people had a $3 entry and they got in. That's not bad. People want to get rich in 10 minutes and will sell on the lost. on the lost. That happens a lot, Alex. Sad but true. Guys, I've been holding XRP for months now. And I've been holding Kronos for years now. And I've been holding Ethereum for mega years now. I'm patient. Have to continue be. There's no other choice. There's no other choice. Unless you are one of those Solana meme coin degens that can swallow a 1-day pump and dump. Because I've been there and it's not funny. But you make a lot of money if you can, Very good. Crow is dead, people are saying. You said Kronos. Of course. Of course, CRO is another big one for me. Might not be for you, but it's for me. Where's my crow fam here watching the house? The Kronos holders, the Crypto.com army. We got the Shiba Inu community also watching. We got the XRP army watching. We got Jasmine. We got Ondo. We got HBAR. We got plenty of different cryptos that we have discussed here in the channel. We love it, man. Pepe too, let's go. Pepe watching, of course. Appreciate it, Pepe. Thank you so much. Love it. Shall we sell then? What's the verdict? Do as you please. NFA, not financial advice. Last time that we had an FOMC, the price went down 24 hours later. So this is basically the end of January, right? It's January the 29th. It's January the 29th. I cannot believe it. Wow. So fast. That's it. First month is gone. And we are at $3 XRP. Last month we were at what? Coming out to 3, so not doing bad. It's just more consolidation for weeks and weeks and weeks, right? I get it. Oscar is gonna go live once again once the market is up green. That's the goal, to always catch the reaction and see how things are moving while we buy on the side, while we're putting some great positions. 100%. Right now there's the confirmation or the confirmation of Robert F. Kennedy, so there's a bunch of things going on. Ooh, Cynthia Lumens just tweeted what she said. One of the first orders of business will be hold public hearings on the strategic Bitcoin reserve. Nice. I'm all for it, I'm here for XRP, I'm here for Bitcoin, I'm here for Ethereum. I'm not really against the Bitcoin. It's just kind of like I want us to work together, for digital assets. That's it. digital assets. That's the goal. My Mensa conference says, has decided not to cut. This is what we expected. Now we pay close attention to what Powell forecasts for the rest of 2025. Agree. We have about 18 more minutes. 18 more minutes to go, guys, for that. We'll be bringing you that soon. Correct. That is what I was saying a couple of minutes ago. So they didn't do anything. I think Jerome Powell and the entire FOMC community could be testing the waters and see how Trump is going to react, because believe me, Trump is going to go after them eventually, saying cut them, or, lower the interest or lower the inflation. I'm already predicting something that is going to happen because I've been in this game for a while, so I know. Toshi is the future. Shout out to the Toshi community. That's good. What do they let news out but have a presser? Just let the news out then. Well, that's the way it's been, They tell us half an hour before the decision, and then 30 minutes later, we get the FOMC info. Sorry. But I gotta tell you guys, I really like what's happening so far. The price is not collapsing per se. I like that. The price not collapsing, it's good news for me, for you, for those who are holding crypto. Understand that we're so early, guys. We're so early. We're gonna be well. Whether it's today, tomorrow, the next year or so, in a few more months. I know we can be rich with this one. I'm betting on digital assets, not on stocks and 401ks and Roth IRAs, or even in 9-to-5 jobs. I'm betting that I can do this with the positions that I have, waiting for the outcome season and selling at a massive, delicious profit so I can make a bunch of money. That's what I'm doing right here. And I'm documenting my experience, and I thank you because we got over 2,000 people watching us right now. So we can do this. I already waited 4 years to be in this position right now. I'm not just about to quit and say, oh, okay, whatever. XRP is not 10. I'm out. No. That's not the way it is. My mom asked me how she could invest $1,000 in crypto. Adoption is happening. Let's go, man. I love it. That's great. Loving your optimism. Appreciate it, the fork. Lucio, is 200 worth of XRP all right? If that's what you have, then of course. Thank you for the first super chat. Appreciate it, man. Thank you. Bitcoin is a leech. Average mining cost per Bitcoin is upwards towards 90K. Oh man, it's crazy, Quitting isn't allowed. You're right, brother. You're right. This is too easy for us to quit. Guys, 15 more minutes to go. 15 more minutes to go. 1-5 to go. For us to see what's happening. More listings. Let's go to FOMC, Right now, XRP. Let me take a look at something that's happening right now. The SEC to create a crypto task force. Yes, that happened I think last week. That's going to be Stuart, the Chief Legal Officer for Ripple, and Vivek Ramaswamy. And obviously, this is like when people ask me, oh, do you see a 10,000 per XRP, right? It's because on X, you mainly see a bunch of these predictions that are super huge. And I get it, man. People just kind of want to see those mega predictions come to fruition, right? Imagine a 10,000 per XRP. No, no, I cannot even dream on it. It's just too much. XCN good to hold, Oscar. I hold it because of my community here on YouTube. Hold a little bit. I used to have more. I sold for profit, and I bought a little bit more once I saw it was at a decent price. 1,000 XRP can get to. Welcome. 1,000 XRP right now is $3,000. If XRP goes to $10 at half a trillion market cap, well, your investment of $3,000 can do a 3x plus. So you're looking at $10,000 plus. So if you look at what you are investing to what it can go to, you're looking at a 7,000 profit gain once it's $10. But to get to $10, it's gonna take a while, right? Might not happen when people won. 1,000 XRP, I think it's a position that a lot of people speak on, right? It's more difficult round than it was when we were looking at 50 cents. But it's just like asking, okay, let's go back to 2002, 2003 and look at Amazon, right? Amazon through the roof in the thousands of dollars before the stock splits. So, bless you. It's just so many variables to kind of like think about. But when you get the Ripple case lawsuit out, when you get adoption, when you get ETFs, when you get RWA and more and trillions of dollars coming and using the RUSD, I mean, it's hard for me to picture that in a price. Okay, it's just hard for me to say, oh yeah, we're gonna be $100. It's just hard because nobody has the real answer, right? It's not as easy to say, oh yeah, once we get these all 10 check boxes, the price must be $50. No, it's just not like that, because a lot of the times people forget to realize that we're in a market where there's buyers and sellers, and there's whales holding billions of XRP, millions of XRP, and they are okay selling at $5, $6, $7, but we are not, because we have to wait till that price gets here. So the more expensive XRP you are getting into first, it's gonna take you longer to get to that profit land, you know? Can XRP reach 1,000 per share, or is that too unrealistic? Thank you, buddy, for the kind donation. Appreciate it. 1,000 is, once again, another level that I don't see right now, because you're asking for trillions in supply, trillions in market cap, man. 2 trillion market cap XRP is $35. And I say that because I just checked it not that long ago. If you compare XRP to Bitcoin, that is 2 trillion market cap, and that gives you $35. 35. So I can almost guarantee you I'm gonna take profits way before that because it's all about the cycles, you know? We're gonna be pumping, we're gonna be dumping, and you have to come in the dumping so you can sell in the pumping. Just as simple as that. Bitcoin tomorrow 95,000. Imagine, bro. There's any positive crypto YouTuber out there other than the blood on the suckers. People don't understand utility coins like XRP. Also, market cap is just one of the metrics. There's liquidity and other market signals, not just market cap. Miguel, yeah, you're right, 100%. There's more than market cap. Way more. Well, guys, good news. Less than 10 minutes, we're going to be hearing from Jerome Powell. Jerome Powell. Less than 10 minutes. So we are ready to pump it up and see what happens. See what happens here. Because I think a lot of people are very happy and ready. Very, very, very happy and ready to see what's going on. So yeah, that was good. That was good. Let's go ahead and refresh this one. Right now, there's not really major dumping. Right now, everything is just quiet. Everybody's kind of waiting for Jerome to speak, to open his mouth. That's what's happening, which typically that's the case. I remember the days back in 2022, 2023, because there was so much volatility as we had the pandemic, and they will cut and they will hike like 75, 1 point, and everything will go down, down. It was just a jungle. Now it's easier. Now there's not much going on as far as volatility, but there was a time, guys, where it was bad. Really, really, really bad. Just to remind you guys. So it's all gonna be good. No worries. We should be good to go. But I'm happy that a lot of people are in. A lot of people are happy, watching, excited. And we always thank you guys for choosing us, because things are about to get pretty crazy. And in a few more minutes, why not? Don't you know, pump it up. You got to pump it up, and don't you know, pump it up. That's always my chant, what I say all the time. My people know that. Okay, we're seeing some levels in the price of XRP right now. A classic bounce, that bounce, right? We dump, pump a little bit, and then come back down. It always happens. It signaling a bit more blood on the street, so get ready. Is that how the song goes? No, I mean, you can go on YouTube and type pump it up, and there's a song after that, but I just kind of like always repeat it. It's in my brain now. I always say it. Dump it up. I know, right? People need to learn about investment and use their head and get out of the emotional bubble they seem to be in. Broadcast. You're smart. 100%. 100%. Yeah, I mean, we cannot tell people what to do. But because we're dealing with money, and if people lose money, they always will have to blame someone else. And sad but true, it's always gonna be the messenger, and I'm the messenger here on this channel, right? And I get it. I'll take it, man. I don't mind when people see me as the guy to blame. But just remember that I'm not buying or selling for you. That's you, right? Always have to do your research and stay calm. Stay calm. It's about to crash, people are saying. Wait a second, all good, no panic. No panic, fam. How many of you were waiting for a dump? How many of you were waiting for some dips or some discounts, right? You got it, fam. Here you go. I got really good news for you. Did he sell? Who? I literally cannot even use my wallet because I'm using my computer and my phone for the comments. So I cannot even move my positions right now, even if I wanted to. So I'm not touching my wallets right now. For the rest of the stream, I'm just gonna be watching, and I'm just getting bombarded by the Robinhood notifications. So everybody is like, all the changes in the price is affecting right now. It's crazy. Crazy, crazy, crazy. Four more minutes to go, guys. 4 more minutes to go. 4 more minutes to go for everything to get more exciting. So I heavily invite you guys to drop a like right now. Subscribe to the channel if you're enjoying this content. Turn on those notification bells. We're not in the office, but we always work hard to deliver some entertainment, content, and ideas, right, for you to consider. By the way, how do you like my new glasses? Look at this beauty. This is what I use to when I'm, using my bike. Oh, I look good. I look like this guy on Twitch. What's his name? Dr. Disrespect. I look like Dr. Disrespect, man. I like it, bro. This is like the blood on the streets shades. The blood on the streets shades, of course. It's like if it's dumping, I'm gonna just use this one. Why not? Can't believe it. That's crazy. 2.97, everybody, and in about 3 more minutes. 3 more minutes. Terminator. I know, right? Bro, you don't want to be Dr. I know. I watch Twitch. I know what happened. I'm just saying I look like, but I know. Oh, man. It started. Let me see. No, it hasn't started yet, bro. It hasn't started. I got it. It's about 2 minutes to go. 2 minutes to go. Perfect. Soon, very soon. Soon, very soon. So, as always, I'll be quiet. I may say a few things, but I'll be responding to your comments. Almost we got 3,000 people watching us. Let's go, guys. Let's go. Ooh, I see some people speaking. There you go. They're testing the audio. Once again, you and I, let's see and enjoy what Jerome Powell has to say. Usually when Powell speaks, everything went down. I know, right? Oh, man. Dumping time. Income tax unconstitutional. Let's go XRP. Trump going all the way. Guys, we're going to have a lot of money soon. We're going to have and see and pump a lot of money. Don't worry much. Just worry about having your bags ready. I'm telling you, do your research, get some good bags ready, because once FOMO comes in, you won't feel ready. Believe me. Once FOMO comes in, I've seen it, guys. Nobody will be able to stop it. We'll have our corrections, but it will still come. All right, we're here, guys. We are here. I'll be quiet. I'll be taking a look at the comments, and welcome aboard. First FOMC of 2025. We are live. Let's go. Chair of the Federal Reserve, Jerome Powell, about to speak and tell us what happened with the rate pause. So let's see. Let's see what the price of everything. I'll be changing from XRP to Bitcoin. And see where we end up. And always both, right? We have a poll. What do you think is going to happen? Dumping, pumping? There we go.
Good afternoon. My colleagues and I remain squarely focused on goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer-run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Steve.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, or from to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does
Let's see
the
what he
president
says.
making these kind of remarks have on policy? Thank you.
3 questions. I'm seeing it really as one question, though. So I'm not going to have any response or comment whatsoever on what the president said. It's not appropriate for me to do so. The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicated this demand to you?
I've had no contact.
Thank you.
Thanks.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at the movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals.
That is a nice recovery,
we
fam.
want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal, and that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance, and I'd say you look at the last couple of inflation readings, and you see we don't overreact to 2 good readings or 2 bad readings, but nonetheless, the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Colby from the New York Times.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So let me look. If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market, and we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good, and there was another inflation reading, I guess, just before the December meeting. So we've got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret 2 good or 2 bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer end, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, fiscal policy and with regulatory policy. We're only just beginning to see, and actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Michael McKee.
Michael McKee from Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder, and meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know, and so you're just on hold, waiting to see what comes down. It's a very large economy, and policies affected at the margin, but we're going to wait and see.
If I can follow up, the idea that you feel the economy, that policy is restrictive, suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut, or data that will tell you you should hold?
We're looking. It's more the other. The way it works is we are looking at the data to guide us in what we should do, and that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation, and as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy, and so we feel like we don't need to be in a hurry to make any adjustments.
Howard.
Good.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question, but to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available, and as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that, I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth.
What?
Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, you know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You've said that the Fed is in wait-and-see mode based on the policies that come out of this administration. Has the Fed started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and you know it's one of the best
Super
things that they
political
do.
questions,
In
right?
each teal book, you can look at the 5-year-old teal books and see their alternative simulations. So that's what they do. There'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, you know, the policymakers to sort of think and understand about the uncertainties that surround this. So yes, the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now, but always. And it's hard to be open to just how broad the possibilities are for an economy. You know, no one saw the pandemic coming, and it changed everything. So things happen, but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case, but you don't act until you see much more than we see now.
Katerina.
Katerina Saraiva, Bloomberg News. You know, last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. You know, we want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation, because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, that then we seem to be set up for further progress.
So far, we're not collapsing,
being seen
everybody.
to set up for it
That's
is
good
one
news,
thing,
right?
having it is another. So we're going to want to see
Welcome.
further progress on inflation. Remember, we're not, we're under 2%,
No
but
cut.
our goal is 2%, and we
No
do mean to get
cut.
back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly, you said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. And so it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing, the ratio of vacancies to unemployed. We look at all those things, and you put your finger, though, on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore. We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But yeah, I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?"
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
I like this.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
Classic power.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to react or discuss anything that any elected politician might say. So I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times, and I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks. Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course, as I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. If we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move? Thank you.
Sorry.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases. And so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There was a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2018. We didn't really know, and the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much, what countries. We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. just so many variables. So we're just going to have to wait and see. And, the best we can do is what we've done, which is study up on this and, look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney.
Pump it, Powell. Come on, you can do it.
Thank you. Courtney Brown from Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI-prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So, let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support the smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon Rabinovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think I think these higher rates are going to they're probably hold back housing activity to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our, as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis, although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. You know, it's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, or praise it for that matter. It's just not our job. I do think that, we found in 2018 there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt Egan.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look at, from a financial stability perspective, at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But, we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective. And we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Richard.
Hi, Chair Powell. I'm Richard Escobedo with CBS News. One question for you. This month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier. One is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level, because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But, overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy is, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see. There's nothing in the data yet on that. But you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet. But yes, you hear it anecdotally.
Nick.
Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today, and I'm wondering, are there any periods from your career or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut? Or are you looking for inflation data that roughly aligns with current forecasts?
So as I mentioned, the economy's strong, the labor market's solid. Downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
Whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts.
It's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And I mean, is that better than our expectations? We expect to see that. It's just a question of when.
Scott.
Hi, Chair Powell. Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if a central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it, if I'm being at all unclear. We're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, we said, what we said was that, at times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Go to Mark for the last question.
Last one.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency.
Finally.
Can you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
So our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and soundness. A good number of our banks that we regulate and supervise do that. The threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new. And we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So.
And with respect to households and their inclusion in the asset class?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do. Thank you.
He had one job. We've been watching for 1 hour plus, and the last question, I'm gonna play it again so you guys watch it again with me. And the last question, cryptocurrency. He mentioned Bitcoin, he mentioned crypto, and basically it's like, we're not against innovation, we're not against that technology. We just want to make sure that there's enough regulation. We want to make sure that there's enough, common understanding so households can do the best they can. I like it, fam. What's up, everybody? Welcome. Drop a like, guys. Subscribe to the channel and turn on those notification bells. You just finished watching with me the FOMC decision to pause on the fraud funds interest rate, and also a decent manage and balance of risk, where inflation right now, obviously we want it lower, but the labor market is doing decent. Unemployment rate is down, and core inflation, headline inflation so far moving okay. And man, aren't you excited, fam? I'm seeing the comments right here. We're really happy. We're really happy with that one, right? So drop a like, let us know in the comments how you feel. We got almost 4,000 people watching us. I'm gonna play this once again. I just want everybody to kind of have a different perspective now that we know, because the last part, and this is gonna be on Watch You Grow. That clip is gonna be at the end. It's gonna be everywhere today. I think that is bullish for the industry, as we know that the Fed is in conversations with Congress, obviously, and obviously Cynthia Lumens is having a chat with Jerome Powell and with the entire committee. Obviously, he didn't say anything about XRP. I see some comments. Guys, we still are years away for Jerome Powell to say anything about any other crypto than Bitcoin, right? Bitcoin is going to be the only one most politicians are going to be speaking. So FYI. Let's go back to this question. This was the question. Bank rate. This is the OG. And look. We are doing green so far, and that's probably why. So let's go ahead and play it once again. I want to listen and just kind of like get that different perspective.
As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
That is a massive question, because one, it's saying, what do you think about the cryptocurrency unregulated industry? And two, are you concerned that this is going to be a threat to households, or what's your opinion? And what he said, I'm going to play it. He was like neutral, somewhat, I'm for it. Like, let the US be bullish in crypto, right? So let's go for it.
You know, so our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and you know, we think it's, you know, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks.
He is not against it, right? Because in the past that we've been watching FOMCs for so long, he wasn't saying something like he just said right now. He was more like, we don't want to comment on that. We're not holding any Bitcoin. Like, if you remember one of the previous ones, he's like, we don't hold. We're not going to hold. That's something not for us. Put it away, right? But on this one, I think things are changing now. He had a conversation with a bunch of Congress people and lawmakers. So it seems that it's all working, right? And look at the price of XRP right now. Oh, look at this. Yep. So this is good, guys. The markets are liking right now what came out of the FOMC. So bullish, everybody. Very, very good. Look at that BTC going in. So let's keep playing.
And it's safe and sound, as many of a good number of our banks that we regulate and supervise do that. You know, the threshold has been a little higher for banks engaging in crypto activities, and that's because they're so new. And
so guys, remember, they just repeal and dismiss SAB 121, if I'm not mistaken. So that one was crucial to let the crypto industry be welcome to the banks, right? Which is really, really nice. Things are gonna get better, obviously, long term, but I think the Fed, with the last question, just gave a little bit of a push. Obviously, Jerome Powell is not gonna say, pump it up to the moon, Bitcoin, right? He's not gonna say that, but let's continue.
You know, we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, you know, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision.
What he's saying right here is, even though cryptocurrency is not heavily regulated, or it's early in the regulation process. We don't want to be against that. We don't want to close the doors. We don't want to say, oh, you shouldn't do that. We're going to let people decide. We're not against innovation. And that is, for us, for you watching right now, that's good. And people are liking that. And the price of Bitcoin has reacted really nice. And we're going to 105,000 FYI. We're going to 105,000. Drop a like, guys, right now. Consider subscribing to the channel. This is exactly why you and I watch FOMCs together. I'm getting all the notifications right here. So it's good, right?
So,
And with respect to households and their inclusion in that.
you want people to be knowledgeable about the financial engagements that they have, and that's why we have, the securities laws that we have. It's why, if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around.
I mean, he's just describing what Cynthia Lumens, guys, he's just describing the new subcommittee. We're going to win. We're going to win. Donald J. Trump is going to like that. The crypto czar, David Sachs, is going to like that. The Bitcoin people are going to like that. And obviously, Ripple and Brad Garlinghouse is going to like that. Because he doesn't have to worry about Jerome Powell. He had to worry about Gary Gensler with the agencies, right? But now we have a new head, Paul Atkins. And then we have a new head on the CFTC. I'm liking what's going on right here, everybody. So I hope that you, by now, we were watching. Everything was like neutral. I mean, you can go back to the video today on this one. Everything was like chilling. And I was looking at some of the comments, people saying, where's the crypto question? Where's the crypto question? It happened to be the last one. The last one. No way that, I mean, it has to be right here. It has to be right here. All over my feed. Here it is. Here it is. I told you. I told you. This is big. This is going to be really, really, really big. Yeah. Banks are perfectly able to serve crypto customers. Correct. This is going to be real. Here it is. Reporter. Should households have crypto? Powell. That isn't our expertise. We want households to understand the risk. We think it will be better if there was a regulatory apparatus on crypto, which it's happening, right? Oh my goodness. Oh, that's good. That's really, really good, guys. It's gonna be everywhere. Yeah, 105,000 for sure. Jerome Powell, we think banks are perfectly able to serve crypto customers. We're not against innovation. Correct. The pump is about to start. Correct. Obviously, Trump may be speaking right now, and oh boy. Oh, Powell claims the Fed does not need to wait for a 2% inflation to cut interest rates. Good. Ah, man, let's go. That's really nice. My friends, click the link down below, guys, if you want to start your journey with BTCC. Create an account, start trading, get up to 10,000 welcome bonus, and get some pretty cool discounts on those fees. It's always good when you have cheaper fees when you're trading, right? So FYI. Very happy to have you guys here. Let me take a look at the comments. And subscribe, of course. We're growing a big community right here with you guys. Pretty cool. You're very helpful. Thank you for guiding us. Appreciate it. I knew that he said that boy not against innovation. Boy, I know, man. That was pretty nice. Sing it, Oscar. Don't you know? Pump it up, of course. Fasten your seatbelts. Absolutely, man. Man, you're scaring me. You were not breathing. Oh, wow. Crypto and the real world assets. The world is going full tokenization. Tower, you're really, really right, hitting the nail right there, brother. When I tell you guys that we are probably gonna about to witness a mega super cycle like we never seen before, it's exactly what Larry Fink, the CEO of BlackRock, said at Davos. last week. He's like, we're going to see more tokenization. So I'm looking ahead at a great future, you know, and it's up to you if you're gonna be ready or not. Incoming all-time highs. This, guys, just give it 24 hours. Look, I can be wrong. I don't know what the future is gonna hold, guys. FYI, right? There's gonna be many things happening, people taking profits, but I have some money, and I think after this live, I'm gonna start buying some. Let me take a look at how many comments we have here, guys. We have 6,000 votes. 6,000 votes. Let's go. Crypto will pump after the FOMC, and that is what's happening right here. Let's go ahead and pay the bills right here too. 3.12 cents. 3.12 cents. Let's go. XRP is doing pretty nice, which is really nice. We have a lot of people, man, and this is exactly how I wanted to enjoy an FOMC, you know. That is why it's tradition here, and that is why I always like to come and enjoy with you guys, because you never really know what you're going to find out for another FOMC. And today we got not bad news. Sometimes you get nothing. Sometimes you get bad news. Sometimes you get great news. I think today we got decent news that are not going to crash the market per se. Are not gonna crash the market, and that's what we want. We don't want things to crash the market. It's not like last FOMC. I think things are gonna be getting a little bit better, little by little by little. You're the best, Oscar. Thank you, buddy. Appreciate it. Welcome. We're always kind of working hard for you, fam. Always. I assume you're Latina, but right now you're a hero to me. Zero hero. What's up, Nino? Happy to see you, buddy. Welcome. Buy them all. I have a feeling this will go back down to 3 by the end of the day before we move up. Just wait for the big whale to buy. Oh, can't wait to see that. XRP holders and everybody here who following the channel, I'll be making some videos once I'm going back to the office home, and I'll tell you like a debrief, a summary, because this is a good one. As I told you, you go back to Watch a Guru right now, and everybody's gonna be speaking on this. Everyone is gonna be speaking on this. Let me go back and see the latest. Yep. Fed Powell says banks can fully serve crypto customers. That to the banks. Understand that banks, if we have 3,000 people here watching us right now, which is amazing, there's millions of people who are users of banks, bank users. And right now, the Fed is telling the banks, you can welcome crypto customers. You see how big that is? You see how big that is? You can welcome crypto customers. Like, they could always welcome crypto customers, but they were somewhat scared, right? But I think it's going to be a good rest of the week if I had to make a guess. Let's listen again.
Our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and you know, we think it's, you know, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound, as many of our.
This is the least political person with a lot of power in the United States. He doesn't speak good or bad about Trump. He doesn't really get too much into policy. But he just gave us a green flag that, in my humble opinion, carries way more weight than the SEC chair, because Jerome Powell is not someone for crypto or against crypto. He just has to be neutral, right? His job is the economy, unemployment, and the inflation. That's his job in a nutshell. And right now it's like Boom. Crypto.com banking is gonna blow up. Dude, John, you're right. Like, that's gonna be pretty cool to witness, right, for a lot of us. Man, that was really good. Yep. Oh, Cynthia Lumen. Somebody told me earlier today that Cynthia was tweeting. Let me see what she said. Ooh. Okay, this is something else. Other different type of policy. Yeah, because there's a lot happening today, guys. We have Robert F. Kennedy. We have legislation passing. You know, there's so much happening in Washington today. But Cynthia Lumens, she's also, you know, talking about innovation and everything when it comes to Bitcoin. One of the first orders of business will be to hold public hearings on the strategic Bitcoin reserve. And I think that's what a lot of banks want. A lot of people want. Man, that's amazing. All right. We need Oscar in Congress. Oh, I passed, bro. But that will be cool. But no, I'm okay right here. I'm okay right here. Beautiful, guys. Beautiful. So that concludes another successful FOMC chat where after 1 hour and a half, we got an answer that is going to help a lot of different crypto users, and I think a lot of crypto holders too. Thank you, everybody joining us. Thank you so much for your preference. Once this ends, if you have a question, let us know. To my XRP holders watching, love you guys. We'll keep posting. Enjoy the DeepSeek price prediction video that we just posted a few hours ago. You will find that we all have different predictions. Nobody knows where the price is going, but at the end of the day, I want to hold a lot of XRP, and I think you know why, right? I think you know why. I'm going to have a lot of crypto because what's coming is going to be really powerful, guys. Don't you know? Pump it up. You got to pump it up. So we're going to have just give or take 12 to 24 hours. Right now, you know, the FOMC just ended, so people are listening to the news for the first time. People are kind of watching the markets right now, but give it a few 12 to 24 hours, and we'll be live once again, enjoying and seeing what's up. With that, thank you guys. God bless you all. Thank you. Please be safe, and I'll see you next time, guys. Peace. Let's go. Love you all, guys. Thank you for joining us. Another FOMC completed. Peace, everybody. Have a good one. Links down below if you want to join our communities and if you want to support. Links down below. Catch you next time. Bye-bye. Thank you. What a day.